In this video, you are going to master draw on liquidity in 10 minutes. Let's get it. Let's talk about draw on liquidity. Draw on liquidity, or DOL, D-O-L, is the foundation of everything that I do. Price is only ever doing one of two things. It's either one, seeking liquidity at swing points, or two, offering fair value at fair value gaps. Liquidity rests at swing points. There are two forms of swing points. There is a swing high, which is a high, a higher high, and then a lower high. And then there is a swing low, which is a low, a lower low, and then a higher low. You can also consider previous candle highs and previous candle lows as liquidity, but if you drop into a lower time frame, those will just be swing points as well. Fair value gaps are a 3-candle formation where we have the first candle, which can be an expansion or consolidation. Then we have the second candle, which is always an expansion. And then the third candle where we have a consolidation or expansion, creating a noticeable gap between these 3 candles. This is our fair value gap. This is an imbalance of buyers or sellers, depending on which gap it is. Fair value gaps are the institutional footprint. They show that smart money is involved with price action, and it just shows that price truly has the intention to want to move. So what is seeking liquidity? The markets are a no-sum game, meaning if you're going to place an order, you must always have a willing buyer or seller on the other side of that order. The same applies for smart money, and their orders are so large that they need to induce and engineer liquidity for the other side of their orders. If they don't do that, they just simply won't get filled. Their orders are so big that they have to do this at a large scale, otherwise they're not going to make money. So smart money is constantly engineering liquidity and pairing their orders at old highs and old lows in price. These old highs and old lows are the same thing as swing points where that liquidity is resting. So put simply, when price is seeking liquidity, it's seeking an opposing buyer or seller. So now let's talk about what offering fair value is. Offering fair value is simply price giving willing buyers and sellers a chance to get involved. Imagine the market as a pendulum constantly seeking balance. When price displaces, aka creates fair value gaps, there's an imbalance of buyers or sellers being offered in the market. So these fair value gaps in price action are simply areas where one side of the market has been unfairly offered. Price is going to want to retrade to these fair value gaps to offer fair value. So if we have a bullish fair value gap in price action, that means there's an imbalance of buyers in the market and an inefficiency of sellers in the market. So price is going to want to trade back to that imbalance to allow sellers a fair chance to get involved. This is the term offering fair value. So price will then retrace to that bullish fair value gap. It will allow sellers to get a fair chance to get involved. Once price has offered fair value successfully, it can continue in the direction that it intends, and it will go and seek liquidity higher. When you're gauging whether price is offering fair value or seeking liquidity, it is extremely important to understand candlestick behavior. Wicks do the damage and bodies tell the story. Candlestick behavior is simply reading the wicks and bodies of candles and gauging whether they are respecting or disrespecting these areas. For example, a wick out of a fair value gap and a body close above it shows respect of that bullish fair value gap, and we can look for price to now seek liquidity higher. However, conversely, if price trades into that bullish fair value gap and then we have a strong body close through it, disrespecting it, we can conclude that price is now failing to offer fair value and it's seeking opposing liquidity lower. So put very simply, if price is not offering fair value, it's seeking liquidity. If we're failing to offer fair value, we're seeking opposing liquidity. So we need to be able to gauge that respect and disrespect of these swing points and these fair value gaps. So now I'm going to provide you a little checklist so you can consistently arrive at the draw on liquidity every single day. So the first thing that I want you to do is mark out the most recent swing high and swing low in price action. So you're not looking left, you should be looking at the most recent price leg that has been created on the charts. From there, mark out the fair value gap that is formed within that price leg. Now ask yourself, is price seeking liquidity or is it offering fair value? Well, you need to understand where price is trading to and where it's trading from. If we're pulling back towards that bullish fair value gap in the leg, then price is offering fair value right now, and we can look for it to draw lower towards the gap. But if price is trading off of that bullish fair value gap and wicking and respecting it, we can look for price to now seek liquidity higher. This is why you need candlestick behavior to gauge whether or not price is respecting or disrespecting these areas. This allows us to consistently have a bias and an understanding of where price is drawing towards. So with that being said, let me show you guys some examples in the charts. All right, so we're on the charts now. We're looking at YM on the weekly time frame. As we mentioned before, Price is only ever doing one of two things. So we're going to walk through that checklist that I gave you guys and get an idea of where price is drawing to. The first thing we can clearly see is that price is in an uptrend. We have bullish order flow, so we want to submit to that idea of longs. The next thing we're doing is marking out the current price leg, the most recent swing high and swing low. Now, I already know you guys are thinking, Cam, there's no swing high right here. I completely understand that there's no swing high that formed yet. However, this is the most recent price leg. This is all that price is going to refer to if it's going to continue higher. So this is our current leg that we're focused on right here. What we're going to do is keep our eyes there and then mark out the fair value gap that is forming on the weekly. So this is where we would offer fair value. Price is clearly having a rejection. We're sweeping this previous candle high, setting up that weekly fair value gap. So I would be looking for price to now offer fair value at this fair value gap and then gauging whether or not we wick or body disrespect this fair value gap. If we wick it and respect it, then I'm looking for price to now seek liquidity higher. This is what I would be expecting because we have that bullish trend. We have that bullish order flow. So what I'm anticipating is a respect of this fair value gap and then for price to now seek liquidity. So we offer fair value into this area here, and then we seek liquidity higher. As we can see, price trades into it. The wick is now indicating a respect of this bullish fair value gap, and then price seeks this liquidity higher. So we've had an entire week with a bullish bias once we see the lower time frame order flow shift and confirm that we're actually respecting this area. So let me make this very clear. We don't need to wait for this weekly candle to close to be able to understand that price is going higher. We can actually identify this based on the lower time frame order flow. So if we are going to head higher from this weekly fair value gap, well, we can view that on the 4-hour time frame and just view the shift in order flow. So let me go back to the weekly and actually mark out the weekly gap on the 4-hour so you guys can see it. So price traded into the weekly gap right here, right? What we're doing is waiting for the 4-hour order flow to actually shift, right? We have a bearish trend on the 4-hour. The order flow has not flipped yet. So at this point, we're still not looking for longs. We haven't respected this gap yet. What we see though is a clear displacement now out of that gap. This order flow has now flipped and we should continue higher. So now going forward, we should expect these lows to hold. These should be protected lows. Price should continue to respect discount arrays and trade higher towards this liquidity up here. Because now that we've respected this weekly gap and offered fair value, we're now seeking liquidity on the weekly at this gray line up here. So now we have a full week of bullish bias, bullish strong liquidity, and we understand that YM is going higher. Price continues higher, and again, like I said, we're going to respect discount arrays and trade towards this liquidity on the weekly. This is exactly what you would want to see, and boom, now we have successfully taken that liquidity. We don't need to wait for this weekly candle close to understand that we're seeking liquidity now. So hopefully that makes sense. Now that I've given you an understanding of offering fair value and seeking liquidity, I want to show you an example of us failing to offer fair value. So we can actually see the exact same thing looking at the daily time frame on YM. So as we know, we have weekly bullish order flow. We're expecting the weekly to offer fair value and seek liquidity. So it makes a lot of sense why when we drop into the daily, we see the daily failing to offer fair value. So let me elaborate. We drop into the daily time frame, right? Price trades into the weekly fair value gap, which is right here. Now we have a daily bearish fair value gap. So people that don't understand price from the top down would be looking at this current leg and saying, okay, YM's bearish. YM's creating a daily bearish fair value gap. So we would look for price to offer fair value and seek liquidity lower. But there's a reason why we fail to offer fair value here, and it's because we're heading higher off the weekly. The weekly wants to go higher right now. But this is a perfect example of price offering fair value, but failing. This is our failure to offer fair value. So once we fail to offer fair value here, we can actually seek this liquidity higher. Now we're looking for price to offer fair value into this gap right here. Price trades higher, clearly disrespects it, and is going to create bullish fair value gaps now on the daily. So we've had a clear flip of order flow and a failure to offer fair value here. So we can actually seek this liquidity right here, understanding from the top down where price is trying to go. So this is what I mean by price is always doing one of two things. It's either seeking liquidity or offering fair value. We fail to offer fair value here as seen by the disrespect of this fair value gap and new fair value gaps higher. And so now we can seek this liquidity resting right here. Now we have a new leg on the daily we can focus on from here to here. We mark out our area of fair value, right? Our fair value gap right here. And if we're going to continue higher, we would want to see price offer fair value here and then begin to seek liquidity higher. The process should continue and we want to submit to that trend because of that bullish order flow. So this is very important to understand. I hope that the chart examples cleared some things up for you guys. If you have any questions, feel free to drop them down below. So there you have it. You guys have now mastered drawing liquidity in less than 10 minutes. If you guys want to learn more knowledge, if you want a mentor to shorten your learning curve, I have a full private community called the Trading Patiently Academy. So if you guys want to join the academy, just go down below, click the link at the top of the description. I offer a 7-day free trial. You can cancel at any time if you don't like it. So definitely give it a try, sign up for the free trial, and I promise I will shorten your learning curve and fast track you to profitability. Thanks for watching the video. Make sure you subscribe for more educational content. YouTube seems to think you'll like this video right here, so make sure you go check it out.